right, we're going to get started with our next panel. So, hold on. Okay, so this is a very special panel for me because of the nature of how this came about. So, a few years back, well, many years back, I met this guy from Colombia. You know, his name was Sebastian. He looked kind of snobby there for a while, you know, but then, you know how nice I am, I won his heart. And Sebastian and I have been friends for a very, very long time. And together we have talked and had conversations throughout the years about how his network, his angel network, has been growing because, you know, mostly a lot of it because of his work and his team, which I congratulate you for that. And I wanted to have a piece of that here in the Rio Grande Valley. I couldn't do it alone, of course. So our partners at BCIC, which is how we came about with eBridge, decided to come together to bring this amazing network to the Rio Grande Valley and provide our entrepreneurs with an opportunity to access capital through such an amazing network that it not only provides the opportunity for capital, but also education and network. And that's so important in today's world, and not just getting the funding, you know, or getting the investment. So I am very proud to introduce this panel today because it's all about, you know, how do we get funded? What are some of those opportunities that we need to take advantage? This panel will introduce some of the best practices and also experiences, and how do we engage with them as an angel network. So without further ado, I will present my other good friend that I think is amazing, not from Colombia, but from San Antonio. And I think it's been amazing that we now collaborate and we try to collaborate. He is not just part of the Angel Network, but also part of Capital Factory in San Antonio. And he will be moderating this panel and introducing our panelists today. So, Luis, take it away.
Thank you so much. Let's give her a hand. I am really excited about this panel. This is perhaps the main reason why it is that I drove 4 hours with Sebastian in the car. Thank you, Sebastian, for being such a great ride or die. Because it really is an opportunity for us as investors and angels to have an opportunity to talk with you. And so I will introduce our panel, or actually they're going to introduce themselves by answering the following question, because it's Ask Me Anything. There'll be an opportunity for you all also to ask questions as well. We're going to ask you some questions on the Whova app. All right, so here's how we're going to begin. Marcos, we're going to start with you. Jasmine, we're going to end with you, just for this round. Okay, so the questions are, obviously, what's your name? Second, what kind of angel investments do you make? Individual, syndicate, or you're an LP in a fund? Okay, I'll explain what that is after they answer. What stage do you like to invest in? What industry do you like to invest in? Sounds good?
Sounds good, sounds easy. Marcus Resendez, CEO 434 Media. I am all three of those things, that being LP, syndicate, and individual. And by way of industry, really kind of agnostic in this asset class, but really do lean very heavily on the Alamo Angels for deal sourcing.
Ooh, excellent. Man, he even answered questions I didn't ask. Trey.
I don't think I can answer that great. But Trey Mendez, I'm here from Brownsville, born and raised. I served as mayor from 2019 to 2023. As far as my angel investment experience, it's been strictly through the Alamo Angels and through the Alamo Angels Network. And as far as what I'm looking for, I really don't have a particular sector. It's more about, does the company make sense? Do I like the idea? Do I like the concept? Do I think that there's an opportunity for an exit at some point in the future?
Awesome. Jasmine.
Hi, I'm Dr. Jasmine Bonder, also an investor with Alamo Angel with everybody here, and a critical care nurse practitioner. I would say invest both individually. Most of my path has been through Alamo Angels. I prefer healthcare as a nurse practitioner, always trying to advocate in my lane, but I'm also agnostic to other opportunities that could help support healthcare.
That is awesome. So that flavor of how an investor invests, for those of you who are new to the room, angels investors can invest in usually one of three ways. One, they'll invest individually, their own money in a deal that they see, or they'll invest as a syndicate. So the three of us, the four of us will all get together and we all agree, hey, we like that deal. Or Trey will find a deal here in RGV and say, this is really amazing. I want to be a part of it. Hey, the three of us or the four of us, let's all come together. That's known as a syndicate. Or as an LP in a fund, which means there's an early stage angel fund that as an investor goes in, and then either you're part of that process of how that fund allocates capital, or alternatively, someone else is allocating capital for you. So you're not writing an individual check like you're doing in the first case, or you're not writing a check collectively as part of a group that's coming together. It's a check that's coming out of a separate fund that's specifically to do that. Sounds good. All right, that orientation. As you can tell, some folks invest only in one area. Typically, it's an area that they know a lot about or that they've got some industry expertise in. But in other cases, you're wide open. You're open to all sorts of interesting things. So let's move on to the next question. We can start with Jasmine and then move all the way down to Marcos. What was your first investment?
This is kind of a funny question because it was my cousin.
Your cousin?
He was like, I have the best idea. And I remember being like, oh boy, like I'm ready for this one. And so I invested in his product that he was doing back probably 10 years ago was AI for clinical documentation. And this was a time I was just practicing at the bedside and I was like, wow, this is an amazing idea. But I didn't realize how many people were in this space. I was almost too naive to think that this was the first time I ever heard of this, the first time someone discovered with it. So it was my first investment that I ever did. It was an individual investment, and what I learned is what I don't know. So it was almost like the best part of being in this space is you learn really quickly what you don't know, and that's kind of the blessing I took from it.
For me, that's kind of an interesting question because as far as the Alamo Angels go, I've made one investment, and it's a company called Nibbles, which was a pet insurance.
Yeah, that's a great one.
Which I really like that company,
I like that one.
and we may talk about this later, but I really like that company because of the founder. And I thought the founder had the right pedigree. He had done certain things. He'd formed another company that had been extremely successful. I liked the concept, and it seemed like they had really done their homework, and they had kind of like all of their ducks in a row when it came to figuring out how to make the company successful. So that's been my one Alamo Angels investment. And then me personally, this is a great, I think I was just out of law school. My very first investment as a private investor was I wrote a check for $3,500 and I bought 50 shares of Apple in 2005.
That was a good time.
And it was, I checked.
Do you still have it?
I have some of it.
Okay.
But who keeps it for 20 years?
I hope you did.
I kind of played with it here and there, but just so you get an idea of you know how things can happen when you invest and when you really like a company, you like their product. So that $3,500 check I wrote was for 50 shares of Apple. At the time, the price was $70. It's since split and done all sorts of things, but I don't have that investment anymore. But had I kept that investment, that $3,500 would be right at about $350,000 right now. So if you believe in a company and you believe that it's going to be a good company, stick with it, invest in it, and hold it long term. I have some other horror stories about stocks that I used to have that I no longer own. And then I do have some stock in some options in a company that was a startup that I was there from the very beginning. I was brought on as an advisor in a company that was an emergency management company, a startup. From the very beginning, it was three guys from Yale that were dropouts. They decided to form a company. I was there from ground zero, just from the very beginning. And then just maybe about 6 months ago, they closed a round at a valuation of $189 million through Anderson. So pretty legit company, and it's been fun to kind of be there from the beginning, see it, advise it, and then kind of just see the ideas build out and see a company grow from the beginning to where it is now. And it's going to continue.
Similar to Trey, of just kind of buying things and being invested in them over a period of time. As I was thinking about this question last night and talking to my team, the first investment that I made as an angel investment was a healthcare software tech startup. Not to bore you with the details, but just could kind of easily understand what it was that they were trying to do. And that was like 8 years ago now. I had actually forgotten that I had made this investment until Luis asked me the question. So to the point of remaining invested, especially in this particular asset class where a lot's riding on either a founder or just factors that could take quite some time to prove out. The reason why it was topical in the conversation is because I had actually just gotten an email from that founder saying that there's now a new customer use case for the tech that was spun up 8 years ago. So to Trey's point is like, if you believe in the thing and you understand the thing, typically there's a time and a space for it, and it's just, are you committed to that time and space? Or in my particular situation, did you forget about it long enough to let it find an end user?
Marcos and Trey, this might be a question for both of you, though. Jasmine, you should jump in as well. So you both mentioned this asset class, and it really is kind of different and unique, right? It's not a public stock that you can sell at any point you can. It's not real estate. You can't go visit it. So can you tell me, and maybe Marcos, you could start, and then Jasmine or Trey, you can jump in. Can you walk me through, like, what's the difference of investing in this specific asset class versus investing in other asset classes? And if you could mention also briefly, like, what for you seems to be the right balance between this kind of investment versus other kinds of investments you may have in a portfolio?
Just for kind of simple language metrics-wise, I wouldn't put any more than 10% of my entire portfolio into this particular asset class, and that's probably even more than I'd be comfortable with. Walk back the question one more time.
What is different about investing in kind of angel investing versus other kinds?
Having access to information. I mean, you usually have a direct relationship with the founder, its board, its executive leadership. You know what's going on. If you have the opportunity to contribute to the company's success through advisement or whatever resources it is that you bring to the table other than capital, you have the opportunity to participate. Whereas if I'm buying a share in Apple, they're not necessarily listening to me, right? But at the same time, there's a lot of volatility in that environment, and you have to be able to kind of stomach that as well. To Luis's point, there's not quick exits, if you will. Like, if for some reason I want to sell a stock on a public market, I can do that. In this particular situation, you're along for the ride. So having a proper asset mix by way of kind of total diversification being 10% or less, but even inside of that, there are so many different investments, if you will, in that particular asset class that Trey and Jasmine, I'm sure, will touch on. So that's me.
Yeah, I think I'm with you on as far as the percentage and the allocation of total portfolio. I think that's kind of where my comfort level is, somewhere between 5 and 10%. But overall, I mean, I do a lot of what I've enjoyed seeing and being part of as part of the Angel Network has just been, like Marco said, you actually have that relationship with the founder from the beginning. You actually kind of see what they're about. You get to see the company. You get to understand what the company's all about. And then you do your own homework, right? Because just because somebody has an idea doesn't mean it's going to be profitable. It doesn't mean it's going to work. I enjoy seeing it from the beginning personally. I like being there from the beginning because I think that the beginning time is when you can kind of tell whether things are going to work or not. I think there's a very small percentage that maybe work out that you think, wow, it worked out. I never thought it would. But I think for the most part, you can kind of tell pretty early on whether something's going to work or not. And that's kind of what I enjoy about it because you have the opportunity to be there to kind of help if the founders, if the company needs any sort of assistance or advice, you're there. You get to put your own money down if you believe in it. There's a lot of opportunities, but it's just a matter of what your risk tolerance is and what you like and whether you're comfortable with the investment or not.
Yeah, totally. I would piggyback both on what they say. It's a very volatile, but a lot of thrill. There's a lot of thrill when you get connected with a very inspirational founder, and you want to invest in them, you want to invest in the idea. But just like every risk stratification score, there is a significant risk in this space, so you really have to understand, can you take that risk? Can you take that type of consequences or benefits from that risk? I would say also, I tend to err towards healthcare because I know it well, because then I could ask those founders, like, have you thought about regulatory issues? Have you thought about the FDA and everything else that has to go involved. When they can answer that eloquently and being able to understand what their next game plan is, makes me more trusted in them and in their process, that they know what they're doing, versus maybe somebody who's more newer to that arena. I tend to invest more in pre-seed and seed, but I really like to trust the founder. I like to know that what they're doing is for good purposes and good intent and will cause more good by doing and investing in their business.
So a little translation there. Jasmine, you used the term seed and pre-seed. So just a working definition. This is not, the definitions are not like set in stone. But generally speaking, pre-seed is defined as being the first dilutive fundraising round that company undertakes beyond just friends and family, people that are early backers. So that's typically pre-seed. Usually, correct me if I'm wrong, pre-seed, the company is raising probably less than $1 million, that there are some that are raising up to $2 million. And for seed, it's whatever's next after that. So companies may be raising, if they raise $300,000 or $250,000 for that first pre-seed, they might now be raising maybe $1 million, or maybe they raised $750,000, $1 million. The seed round might be $2 million. So that's typically sort of what we're looking at for that total stage. Jasmine, you mentioned this a little bit about sort of the personal relationship and asking the founders these questions. You mentioned that your first investment was your cousin. When you're making an investment, like what are the factors that go into in your mind in making a determination of how you're going to make an investment or who you make an investment into? And then I'll follow up with Trey and for Marcos to add anything that the previous speaker has not mentioned. We'll start with you, Jasmine.
I could talk for like 5 minutes.
Well, you get the floor.
So great question, and hopefully I answer this correctly. I think when I'm speaking to a founder or a team that has just built something great, I really like to challenge these what ifs, because as we know in startups, you got to pivot like every day. Every day is a roller coaster, and if you haven't felt it yet, you will feel it soon. And so recognizing how they deal with conflict, and when conflict arises, understanding their behaviors when it becomes challenging times, especially now when we're so much influenced with the current administration and what that does to business. You need to be able to be resilient, strategize, and keep moving forward, like keep rolling with the punches. And so for me, as you know, I kind of leverage my nurse practitioner background and go like, how resilient is this person? Have they had adversities already in their life? How did they overcome it, and are they greater for it? And if they can give me that narrative, no matter what they're doing in their business, it makes me more confident, and I hope to like leverage that for them as well, to say, hey, we talked about this a year ago, you already handled it, let's keep on that momentum. Does that help answer?
That's a great answer. We'll see what Trey adds.
So I've kind of broken down my strategy into 4 Fs. The first one is founder. The second one is flow, deal flow, cash flow. Third one is field. What does the field look like? Is there competition? And then the last one is future. What is the future? What are they planning? Where is it going? So on the founder, I really look at, does this person have it together? Do they have an idea of what it is that they're doing? Like you mentioned, have they even done their homework on the patents they may be necessary? Do they have patents? Do they not? Do they know who the competitors are? That's where the field part of my strategy comes in. Who are your competitors? And then on cash flow and deal flow, it's like, do you already have customers? Do you have people that actually, is there a demand for this product? Is there people that are looking to do something? Are you solving a problem that nobody else has solved, or that nobody else has come up with the technology to solve? And then what do your books look like? What's your finances look like? How much are you trying to raise? What are you going to use that money for? On the field, who's the competition? Who else is out there? How far along is that company? How big a competitor are they? How much money have they raised, et cetera? And then on the future, it's like, I want a founder to be thinking about, where is this company going? What do they want it to be? And it's usually never what they think it's going to be at the beginning. It changes. You have to pivot. You have to kind of figure things out. You have to maybe change technology, obtain different things. But that's my strategy.
To try to layer into that, I would just break it down to, for me, my approach, 3 things. It's either something that I can understand, and mind you, these things don't always work. Like, I understood the healthcare software company, it has yet to pay anything, right? So it's either something that I can understand, it's something that I believe in. I believe in AI. Those are some long-term bets, but there's been some money that has been made near term, or it's something that I can trust. And that just comes down to data for me. Like the S&P has returned on average 12% for 1 trillion million years. Like that's just something that you can trust, right? So for me, I either understand it, I believe in it, or I trust it, in addition to all of the things that Trey and Jasmine said.
So we're going to start with Trey, and then we'll continue with Jasmine and with Marcos. So Trey, the question for the panel is, what is an example of investment you did not make, and what caused you to go, nah, pass?
I think there's been a few. I think some of it is you hear an idea and you think, wow, that's a really good idea. It seems like they have their ducks in a row. It seems like they've really thought this out. It seems like they've gotten some momentum or some early stage funding. But then you kind of go into the concept and you see that somebody else is already doing it, and that idea has been done by somebody else that's way far ahead. And I mean, for example, this isn't a company that there was an investment opportunity in, but it was a company that was talking about air taxis and talking about wanting to do all these things when it comes to air taxis. You look at the field and you look at what's already out there. You see that Google's invested heavily in a company. You see that Amazon's invested in a company. You see that these companies have already obtained certain licenses and certain things, and they've gotten to almost $1 billion in funding, and this company's barely talking about what they're going to do and have a concept. It's like, yeah, that ain't going to happen. So things like that, you just kind of have to run some of the traps on your own, and then sometimes you're like, how did they not see it? Or maybe they already saw it, and they're just trying to raise capital and trying to get out.
Jasmine?
You know, I think one of the privileges I have being a part of Alamo Angels is really recognizing like the expertise I have in a room. Sometimes we have like great pitch days that people come and I'm like, this is such a great idea. But I'm not an immigration lawyer. I don't know what that means to some of these businesses that are coming in. I don't have a background in certain finances. I don't know what that means. And so having that camaraderie in a group has been so educational for me to see like, hey, you know, even though I think it is a good idea, how does that influence other industries? So it's almost like a privilege to be in part of a group that fosters education and camaraderie under other disciplines that I'm just not exposed to my day-to-day.
So what caused you to say, nah, was you initially thought, hey, this might be a good idea, and someone else in the room was a little bit more critical or was like, no, I'm cold on that opportunity?
Yeah, so there was a company that came through that I thought had such a great idea for lateral mobility in nursing. And as a nurse practitioner, I'm like, yes, huge workforce demand, such a good influence. But someone had brought up with the recent change in administration, what does that look like with immigration? And that was not the first 5 things that went through my head. I thought, like, here's a problem, they're solving it, you know, good outcomes, the numbers made sense to what I know from my knowledge. But someone brought up, here are like the 10 challenges this person will face to enter this market. And I was like, you are the expert. So it's also something, again, like when you're investing, making sure those people are the experts in the challenges that we'll face, critical for investment.
Marcos?
Yeah, very similarly, and actually I'll kind of catch on to that of investments that you coulda, shoulda, woulda, is very recently, and this hits close to home, a group of folks, a syndicate, had the opportunity to invest in XAI. Directly. And there was just enough, if you will.
Valuation, though, man.
There was just enough discomfort in the conversation.
It's a little too rich for me, man.
Which, again, right, is very legitimate and real conversation based upon people who have experiences over periods of time, et cetera, right? So, kind of, we passed. Long story short, we passed. I think it was, I don't know, less than 30 days later, XAI and X, and we would have kind of immediately made some money. Now, the reality is there'll be another one of those deals in 5 minutes. Now, the scale of that deal is a bit different, but in this particular asset class, it's learning how to do the things that Trey and Jasmine just said, is when to say no to some things for whatever the reason that you're saying no for, is listen to the experts is kind of like a really good first principle on that. If I don't know something about that thing, I should probably listen to the person that does. And that doesn't necessarily qualify them to give you investment advice. It's just them sharing some experience that is specific to the thing that you're listening to and being wowed by a founder, because there's some pretty cool ones that are out there that will sell you on the dream and the vision, right? But the reality is there still needs to be some pro forma and some economics, and you touched on this during Perfect Pitch when you were down here about a month ago, is like there's just some core principles that have to be there. Elsewise, you truly are just giving money to a founder and hoping that they are going to find their way X years into the future.
Yeah, because I mean, this is an investment. You hope that money comes back with friends, and you hope it comes back with lots of friends. So let's talk about those investments where you got the opportunity to say yes. We'll start with Marcos, and then we'll go down the rest of the panel. We identified one that made you go, pass, I don't think so. Which is the one where you saw and you're like, man, I am so excited to be in this deal. What were the factors that made you go, not just yeah, but like, oh yeah, hell yeah, into making an investment?
Yeah, so there's two, I'll only talk about one. So one that I was hugely excited about was Apptronic. Just
deal.
need to get a shout out on Apptronic because we had a direct deal. This is an example of access. But the one that I was really excited about here recently was Jenny. Jenny is a Ben Jones-led company. Those who don't know Ben, he is a San Antonio-based founder. He had a significant exit. Is an example of people that we want to try to continue to resource. So since that exit has really been resourcing founders and ecosystems and accelerators, kind of, cross-continental, but had the opportunity to create a company, Jenny AI, that was very kind of similarly aligned to the business that he had just exited, but had the opportunity to leverage now relationships that had he had when he was working on Skipcart would have really accelerated these outcomes. And some of those relationships, and Sebastian can correct me if I'm wrong, but came through the Alamo Angels network of people who had similar experiences at similar levels who are now involved, and this will be the single biggest check that the network has written to any company. That includes Apptronic, which by way of size and scale is significantly bigger. But to be able to write a 7-figure check to a local founder made me hugely excited and really just kind of was, a validation of the effort.
So I'm hearing founder, 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 founder.
Aligned to their experience prior, now resourced with other founders that have experience on what they're all now leveraging through that common experience.
Awesome. Trey.
I spoke about it a little bit earlier, which is the one investment I've made so far, which was with Nibbles. But I like that one because I thought the founder, like I said, had a good pedigree. I thought they had success in a previous company. That company had grown significantly. I thought the valuation to get in on it was reasonable, and I thought that it had an opportunity for an early exit or an early buyout in the 2 or 3 year time range. I thought that they had the right partnerships in place. I thought they had thought it out. I liked the approach to the company, and I liked that it was in a market that I felt had a huge potential for growth, and that was doing it in an interesting way.
I'm going to piggyback of Marcus said because I also invested in I was so excited. It was my first e-commerce space too. And I think what sold me is on the memo, there was a picture of said, this is this current shit show and this is how I'm going to solve it. And it just made so much sense for me, who is a visual learner, to enter a space and say, wow, this is brilliant. This was so easy for me to understand. I see the problem and I see the solution. So something so simple as the memo, like my husband and I were like, yes, tomorrow. Like it was almost immediately from reading it. And then also talking to Ben Jones, like what an amazing founder from San Antonio. So supporting locals, supporting local growth, like gives you the feel goods,
So Jasmine, you get this a lot. We'll start with you and then we'll go down the panel again. What do founders get wrong in pitching their opportunity to you?
Ooh, this is a tough question. You're not, Even though I know it's a sales tactic to pitch, you're also like educating at the same time. And if you can lead with education, I think you're more successful because we're not all experts in everything. So if you can really educate me in the way that you're pitching and illustrating, similar to what I just said, makes it so much more simple for just like the common folk, really. And so being able to have that ability, I think it makes you an expert founder.
Trey?
I think what I've seen is some founders get it wrong because they assume that everybody in the room knows exactly what it is that they're talking about and that is in the same field and is somehow really as far along as they are on the background and education on this particular type of company or this particular product or idea. And the reality is not everybody knows the terminology, not everybody knows what the field is like, not everybody knows what the problem or the solution is or why this is such a great idea. I think some of them get lost in terminology. I think some of them just get lost in speaking way above their audience. Even though it's a sophisticated group of people, they still talk above the audience because they're talking in terms that nobody necessarily understands. And if they're not relatable or they can't read that room properly at this stage, I don't know that they're ever going to.
Agree with Trey. So, that's really the reason why we're down here, and you've been a part of this, is we've been coming down for 6 months trying to preach and teach what social determinants of health are, and it just really came down to speaking some very plain language about literally what are the social determinants of health, right? So, even me, as a founder and or somebody who gives advice to folks, I get that wrong too. Like I talk too much, or I take somebody down a rabbit hole that means something to me, but doesn't necessarily mean anything to them. And a good reminder is Startup Bootcamp this past Friday. As Geekdom was welcoming people in, some of those core components in like the very first exercise, the elevator pitch. Who are you and what do you want? Right? Like that's not a callous statement. That's a foundational and necessary statement. Who are you and what are your needs in any language? If you can't get those two things right, like it's very hard to get past that without then just kind of throwing on all the language and all of that stuff, and by then kind of just lost, right? Like there's a reason why folks say kind of give me the elevator pitch. So as remedial as those exercises may seem, if you've been in the space for a while, like I got to tell you, hugely important, hugely important.
So this will be the last of my prepared questions. We will, after this question, go out into the audience so that you too can ask me anything. Well, ask them, but ask them anything for their questions. So there may be some potential investors in the room. So we'll start with Marcus and then go all the way down the panel for the final question for the panel. There's a potential angel investor in the room. What advice would you give them if they're interested in starting this journey of becoming an angel investor?
Make sure that this doesn't constitute a first investment. Meaning, like if this is your first thing that you're investing in, don't do that.
Don't jump at the first deal either. There's, like Marco said, there's so much opportunity. The first company you hear, you may think it's a good idea, but give it a little bit of time. Get acclimated to the opportunities. Understand what it is that the pitch is about, and don't always jump at the first opportunity.
Jasmine.
I would say get a mentor. Find somebody who's done this before in the past. Take 15 minutes of their time and say, like, what the hell am I doing? Like, what do I need to ask? What wouldn't you ask? What would you do? How would you approach? What is an appropriate investment amount? What should I ask for? What does a diluted, non-diluted fund look like? What's pre-seed, seed, Series A? All these, like, acronyms we just used on the fly. That is exactly those 15-minute conversations you'll have with the founder that you need to strategize about. Find a mentor. Add me on LinkedIn. I'll be your mentor. Really just open up the space, and I think you'll be more successful having that in your pocket.
Yes, and I'll add to that, like everyone on the panel is available on LinkedIn and in your Whova app. Don't forget to log into your Whova app. Reach out to these great panelists. This is now the time where we'll be asking questions from the audience. So please raise your hand and I'll make sure that we'll get the mic to you and we'll have some questions for the panel. First question up front, please. Your name and then the question.
Hello, I'm Rebecca CEO of DiaBuddy, a diabetes management app. And my question is, how do founders connect with angel investors like Alamo Angels?
Great question. Commercial.
The one over there in the glasses, as a matter of fact.
How do people connect with Alamo Angels?
Francisco, introduce yourself.
Yeah, so I'm Francisco. I'm on the team with Alamo Angels along with Sebastian. I would say, for us, we're super easy to access. You can simply email us or drop us a message on LinkedIn. As long as the message has some relevancy about why you're trying to connect, I'm happy to always do that. So.
And I don't know, isn't there a website?
Yeah, we have a website too, where you can always go learn a little bit more about us, and then also we have an online submission form. But happy to be accessible in any way that makes sense.
And I do believe you're on all the socials, right? LinkedIn is the best. So a great question from Philip up in front. How do companies qualify to present or submit before Alamo Angels?
Yeah, our process is fairly simple. Always happy to have a first conversation with the founder. Pretty much, as far as what we're looking for, our ideal preference is for companies that are based in Texas. We're industry agnostic, so we have invested in a lot of different spaces, and so really the requirements for what we're looking for might vary in different spaces. For example, a med device might be a lot different than Jenny or a Nibbles investment, but overall, the high level of what we're looking for is pretty much, exceptional team, just as they've mentioned. Some early traction, whether it's maybe a alpha, beta, just something that kind of indicates that you're building something that other people find valuable that they might also pay for. So yeah, always happy to chat and have a conversation.
And then I will use moderator privilege before we go on to the next question. If you are too early to have a pitch deck, you are too early for Alamo Angels. So a pitch deck is the medium by which investment opportunities is made, and so you have to have one, full stop, or you're too early. So, fair? Awesome. Next question. All right.
Hi, hi everybody. Philip Hernandez. So this question is for any of y'all. So you see a lot of pitches, you hear a lot from founders, and a lot of it is kind of following a similar format: the problem, the solution, their unique solution, and who's going to pay for it. Do y'all have any questions when it comes time for the founders to say, and we're open to some questions from any of y'all in the audience or any of you investors? Do y'all have questions that you're going to ask, or what's your process when you're listening to them to ask those questions?
Yeah, I can jump in. Sometimes, the first time when I started doing this, a lot of acronyms. You hear a lot of TAMs and SAMs and SAS and LAS and MAS, and you're like, what the hell? But sometimes when they're doing the TAMs and SAMs, I'd like to understand, what does that mean? Your total addressable market and your serviceable market is very different. How do you get those calculations, and where are you getting that data from, or where are you referencing from? It's usually the first question I ask, because sometimes when you start peeling that onion, you realize the serviceable market gets smaller and smaller because there's so many caveats to it. So it gives you maybe a big idea, but when you know the industry well enough, you can start slivering of this is the actual potential that this will impact in the space.
Yeah, I totally agree. Some of those are super aspirational and laughable. Actually, I see it, I'm like, yeah, right. But typically, I don't even need to ask questions most of the time, because it's by the time they're done, it's already it's either yes or no. But most of that is also you as an investor learning about the company, doing your homework ahead of time, finding out as much as you can about the company, about the idea. You get the materials ahead of time, typically, as far as knowing what the market is, what the problem is, how they're addressing it, what they're looking to do, what the valuation is, et cetera. So by the end of the presentation, I'm at that point, it's either I already know.
Yeah, for me, just instincts based upon listening to other people who are smarter than me ask questions, especially if they know about that particular industry. But in the moments with which we're seeing the pitches, the environment is 7 minutes, and then there's like 7 minutes. So legitimately, if there's somebody who knows what they're talking about in the room, like, I defer. What I'm looking for is there a smoking gun, if you will, where it's like something is just, it stands out, right? It takes $1 million to produce something in an environment that you're only going to make $10, like just something really sticks out. Elsewise, it goes back to the, do I understand it? Do I trust in it? Do I believe in it? And is there a question there that has some value to the room and to the founder versus something that I could go find myself, right? Like, hey, when are you open? Like, that's kind of the wrong time to be understanding somebody's application at a very kind of in the weeds level. And typically that's what ends up happening because we're just very quickly trying to understand what truly is the opportunity and then dial up a macro level of thinking based upon whatever the disciplines that we may be subscribed to. So, you know, the good thing about the organization is that Sebastian and Francisco have created a mechanism through deep dives to say, hey, look, it's something that I may not have asked a question in the room, but I do have some questions. I just want to take those away, kind of think through them, but now I have a follow-up mechanism that's meant to spend more time with this person before I make a decision.
I also wanted to piggyback what Marcus was saying. You can start doing market trends individually. Right now, if you invest in something with health AI, I mean, there are so many people in this space. It's really flooded now. And some are doing well. You can see some of those fruitions. But if someone came up and said, hey, I'm doing AI, like, AI in what? It's like everywhere now. Everybody is using it now. So like, it's not as fancy as it was probably a year ago, but now it's like, okay, what actually are you solving with this?
That's awesome. Other questions? Yes.
Speaking of questions, we know like famously YC rejected like Uber and Airbnb. Personally for you all, what are some of your rituals, your whatever you want to call it, if you practice Santeria for it? How do you prevent those? How do you prevent passing up on an Airbnb?
Well, what I was going to say is that I think Airbnb and Uber kind of came along at a time where VC funding was way more available. And they lost a shit ton of money their first several years because their strategy was more about growth rather than actually making money. It took Uber years to turn a profit, and they barely started doing it. Same for Amazon, actually. So, I mean, you can't kick yourself. If you miss something, you can't kick yourself, and it's always, I mean, you can't tell the future. If you did, it'd be a different world.
You'd be sitting here if you could do that.
No, but I think the market and the venture capital market has really shifted throughout the years. I mean, I remember when I was mayor, there was a lot of money available for space, and people, like she just said, now you talk about AI, people want to throw money at you because they think, oh wow, that's like the thing. That's what people are making money on now. Wow, like this company went from $0 to $1 billion in months or a year. And back then it was space, and I was involved in space startups and seeing a lot of companies come through that arena to where in 2021 you could say, oh, I'm in space, I'm doing space, whatever. And people would throw money at you because there was a lot of people that had made a bunch of money on cryptocurrency and had no idea, were not sophisticated investors, but thought, I took a lotto ticket on Bitcoin, I'm going to take a lotto ticket on this crazy space startup, and then they wound up with nothing. So yeah, it's always hard to vet, but you just have to have your own strategy and your own principles.
Kind of thematically speaking, it goes back to the XAI deal, right? It's like not kicking yourself for that because there's going to be another one in 5 minutes, and legitimately so. And that's the beauty of this asset class, is that there's always somebody who's working on something that is going to save the world somehow, right? But there's just some core principles that are underneath that vision that just have to kind of be true. And we had referenced that this morning when it's, you got to roll up your sleeves and do the work. Okay, that's a founder thing. Right? It's like, do I feel good about the founder that they're going to roll up their sleeve? And then just kind of the economics of the environment. Like, there are certain things that just kind of have to be true. But the reality is in this particular space, the other truth is that you could get deal heat really quick because you're just seeing things all the time. and you constantly feel like you are just going to miss out on something, because that's the information that you're being fed on a daily basis. Like, oh, you missed the crypto thing, you missed the AI thing, you missed. But the reality is like every day you're missing on something. That means that every day something's getting done. There's always an opportunity. That opportunity is sitting in this room. All I'm saying is as a total investment opportunity, and as this education is hitting communities, is like, but don't lead with this thing. If you're going to do that, invest in yourself. Invest in your business. It's the same. You're your own angel investor at that point.
Yeah, great question. I have immense FOMO when I miss out, especially in our group chats. I'm like, God, XAI was too busy working to deal with this. But anyway, it happens. I invest on a quarterly basis, and really during the 3 months pause hiatus that I have, I'm really just looking at market trends, see what's coming out, see what's going on with the administration, where do I think, currently with the tariffs, what is that going to do to impact healthcare? Really have that oversight. And you miss stuff, we're human, but something will come by, and with me doing this assessment process has helped me not feel this urge to invest immediately, more invest strategically.
Jasmine, moderator privilege. You had mentioned you had taken a 3-month hiatus,
Yeah.
so we can go down the panel. How is the sort of financial market, the uncertainty, the chaos that's currently happening in 2025 impact your angel investment plans for 2025? And can you mention a little bit about that? And then can you give us some sort of window about how many investments you'd like to be making this year?
Great and complex question. I work in healthcare, so I have a lot of job security. Working in the ICU. For me, it just made more sense for me and my family just to trend everything. Usually around the 9-week mark, we have it on our phones, like, hey, what companies were interesting in the last few months? I get tons of LinkedIn messages, people ping me, and I really just want to get to know you first, and if I find it interesting and worthy or something coming through Alamo Angels, I definitely will keep in touch until we're able to commit in that way. Check sizes have varied for me personally as an individual, and so making sure that A, I've kept in touch, B, that it made sense for me, my family, and all the other responsibilities. Current market has not influenced healthcare, thank God, so I have not had that jeopardy, but I know other markets definitely have been impacted.
Yeah, so I have my own personal portfolio outside of this network. So on that, it is kind of, you get gun shy. Sometimes you see the volatility that's been in the market over the last 2 years plus. Really starting in March of 2020, seeing that dip, then the pop, and then seeing it go back down again, and then now seeing it happen again earlier this year. You get kind of gun shy, and you're like, gosh, what am I going to do? And what's next? Because the market volatility and market shifts on so many things and so many factors nowadays. So on that, my own personal stuff, I kind of sometimes sit, I'll cash out of some stuff, and I'll kind of just sit, wait for what I think is a good time, and then maybe jump back in. And then on the Angels Network specifically, I'm not really set with any certain amount. It's just a matter of will the right deal come along? Is it some company that I really like? And if so, then I'm going to jump at it.
For me, again, more of a mathematical equation, but if there's less money available due to recessionary environment, there's just less money to put into a 10% allocation, right? The problem with that, and we just talked about it a few times, is the deals keep coming, right? So even in a recessionary environment, there's always somebody who's got the next big thing, and that's where it's like, I also have to look at my total portfolio and see, are there things that I invested in a year or two ago that have moved into different asset classes that would still make that money available without me going over where my level of comfort is? And or is there something generationally happening that I understand, that I believe in, and or that I can trust, right? Back to the principles, and then just, hey, that's a risk that I take. As it relates to the kind of here and now is very similar to the two of them is, there's a little bit of dry powder that's been waiting for some opportunistic buying based upon some dips. I'm not necessarily trying to time a market as like a day trader would. I don't have that time. I don't have that skill set. But I do have enough resourcing and advice and just intelligence to know that if there's a company out there, name whatever blue chip company out there that you love, Apple, for example, they're not going out of business tomorrow. And at some point in time, those economics will figure themselves out. So, that for me has kind of been the approach in this first quarter. But then along comes something like Jenny, and you're like, you know what, I know I said I was done, but I'm going to go, right? So this is where it's drugs, right? Yeah, so there you go. Yeah.
Last question or second to the last question.
Hello, Eduardo Casillas here. I'm wondering if your research and the trends sort of tell you that you must invest or you should invest in a certain type of business or industry, but you're not getting any pitches like that. Would you, just out of curiosity, would go out and try to search for companies to invest in, or what would you do if you had this gut feeling of investing in something?
Great question. I definitely have, especially peak pandemic. I knew exactly where the world was going. What were the needs at that time? And so I was actively searching for founders that were solving the issues for healthcare, again, my specialty area. I was looking avidly for founders that are solving the issues because I knew that would bring more reward to my community around me. So definitely some person that I like to search for others too, and sometimes that's happy chemistry.
Yeah, I mean, if I don't see an opportunity, I think it's going somewhere, I'll just go to the stock market. And there's plenty of opportunities there. But I think there's a lot of opportunities in biotech. I really think that there's so many untapped things. We've seen some impressive gains in that, and we've seen some people with great ideas. And then now that we see AI, there's a really beneficial use case for AI in the medical industry, several. So it's a matter of, does this company get it right? Because they think they might, but are they really getting it right?
And look, I think anything that has AI on it gets people's attention, but there is kind of a waning appetite in certain areas of that. So for me, it's just kind of the application of it more than the building of the infrastructure of it by way of chips and plants and all that stuff. Is how are people using it to accelerate environments, to increase margins, solve real world problems? That's kind of where I've been trying to pay attention to cross environment.
And we've got time for one final question. Final question in the back.
So Trey, you mentioned earlier that really early on you can tell if a startup was going to be successful. What were those specific signals or factors that you saw in the maybe founder or the idea that made that determination?
I think all of us felt the same way, that the founders is right away you can tell whether the founder's all in or not. If they're not all in, you're not going to be all in on them. Then you kind of have to see how sophisticated they are as far as how much research have they done, how far along are they. If they don't have their ducks in a row as far as what their market is, who their customers are, and they haven't made any actual inroads in acquiring that or getting past maybe acquiring a certain type of technology or raising the capital, I mean, you can usually tell in that 7 or 8 minutes whether they have their stuff together. And I think we can all usually tell whether they do have their stuff together. Sometimes founders have their stuff together, and it's just not the right idea. And that's okay. I've seen founders go out of one company into another one and have done very well. So sometimes you see a founder that has a lot of potential, or they may have the right idea, or they have the right mindset to approach the problem, but maybe there's a couple things missing there.
That concludes our panel today on Ask Me Anything for Alamo Angels. Alamo Angels is incredibly committed to the exciting startups that are sort of growing here in RGV. We're excited about our partnership with the Eber Center and the great work that you're doing here. My name is Dr. Luis Martinez. I'm with Capital Factory. Please join me in thanking our panel, Marcos, Trey, and Jasmine. Thank you all so much. I'd like to remind you all that please check the Whova app for the incredible events that are happening later today and tomorrow. And I will pass this on to the person who needs no introduction, the one who is, was, and always shall be. Let's give it up for Linda.
Thank you, thank you. Okay, so this concludes our day here at eBridge with our last panel of the day. We invite everybody to join us at Pluton Brewery for our Failure Nights event, which starts at 5:30 tonight, and we will have 3 great presenters that will tell us how they failed and then got up again. So we invite you to come and celebrate entrepreneurship with our friends at Pluton Brewery, which is a couple of blocks away from here. And then tomorrow we do it again. So tomorrow we start with some great panels. We have our Insights Unplugged series. We will have 2 great influencers that are also entrepreneurs to talk about how the world of influencers is also important in entrepreneurship. And then from there, we go on and on and on and on with all these different panels and sessions. Like Luis said, check out the app. And then we conclude with 2 for 2 pitch competition, 2,000 for 2 minutes. It's a great event. One of our founders is actually giving that $2,000 to our new founders. So we're very excited about our event, and we can't wait to see you back here at eBridge. Free food all day. As you can see, we have it. So come and join us tomorrow, and we will see you at Pluton later today. Thank you, everybody.